This is the first of a two-step process that has rattled global markets unlike anything we have ever seen since the pandemic. Certainly, he has upended the global economy, the trading policy, in a way we have not seen since before the Second World War. But the question now, going into the weekend, will the president be open to some negotiations? He signaled that he might be with Vietnam, for example. He had conversations with the leaders of Vietnam, talking about the reciprocal tariffs that he has threatened to impose on them. Of course, that is a very big trading partner. But China striking back extraordinarily hard with a 34% reciprocal tariff to essentially match the one that the president said he would impose on them. Again, that deadline is next Wednesday. What will change the president's mind? A variety of people we talked to around him say he is being defiant on this strategy to go ahead with this tariff plan that he has long believed. He believes that American manufacturing should be more robust. More jobs should be conducted here in the United States. He calls it a golden age. The question is this era of protectionism something that is realistic in today's economy? So there is no doubt this self-inflicted wound on the financial markets has really caused so much consternation. Heading into the weekend, what will the president do as he talks to more business leaders in more countries? Again, that next deadline on Wednesday, we'll see what the markets look like by then. Jeff Zeleny, CNN, West Palm Beach, Florida.
Interesting the president chose to go play golf today. I mean, does he...
I think long ago he stopped caring about certain optics, and he's made very clear during this presidency he's going to do what he wants. And, you know, it's not just playing golf. He went down to a Saudi-backed golf tournament that his family business does business with to speak at some event related to that. So, yes, all of this...
And did not go to the return of service members.
And did not go to the transfer of the dignified transfer of remains of those fallen service members. He is not messaging this in a way that suggests that he understands what average people might be going through right now. And part of what it is he is convinced he is right. He is convinced he's going to show people he is right. He has believed in tariffs for 40 years. You know, he wanted to do this last time, and he was stymied by a bunch of advisors who were much more pro-free trade. And now he's going to do what he's going to do. He's doing it in a very different economy, post-COVID. He is doing it on a much broader scale with these tariffs. And I think most significantly, Anderson, with a formula that does not make sense to a lot of people. That, you know, once people were looking at what this formula was, it was difficult to comprehend. It's difficult for people in the administration to explain, and they will acknowledge that privately. So whether any of this impacts him and his approval numbers, I think, is the question. If it starts to, then you will possibly see a change.
No, their economies are not crashing. Their markets are reacting to a dramatic change in the global order in terms of trade. And so what happens is pretty straightforward. If you're a company and you make a bunch of your products in China, and all of a sudden shareholders or people that play the stock market realize that it's going to cost a lot more to produce in China, your stock is going to go down. But ultimately, the markets, as long as they know what the rules are going to be moving forward, and as long as that's set and you can sustain where you're going to be, the markets will adjust. Businesses around the world, including in trade and global trade, they just need to know what the rules are. Once they know what the rules are, they will adjust to those rules. So I don't think it's fair to say economies are crashing. Markets are crashing because markets are based on the stock value of companies who today are embedded in modes of production that are bad for the United States. We have to be a country that thinks we're the largest consumer market in the world, and yet the only thing we export is services. And we need to stop that. We need to get back to a time where we're a country that can make things. And to do that, we have to reset the global order of trade. We can't continue to be a country that doesn't make things. We have to be able to make things to provide jobs for Americans. That's it. It's that simple. China, as an example, I mean, it's outrageous. I mean, they don't consume anything. All they do is export and flood and distort markets in addition to all the tariffs and barriers they put in place. So the president rightly has concluded that the current status of global trade is bad for America and good for a bunch of other people, and he's going to reset it, and he's absolutely right to do it.
I'm going to put that in bold-face type. This is a really big deal. These tariffs, these 34% tariffs on all American imports, are the fight back that China said it would do if pressured by the United States. These additional tariffs, because there are already tariffs of anywhere from 10 to 15% already in place, these tariffs will certainly hurt the American economy in the sense that they will really hurt the heartland of America, as in America's farmers. Right now, if we look at all of the products that China imports in from the United States, soybeans top the list. Soybeans are needed here in China because they are the ingredient that fuels the pork industry, which is one of the top commodities in this part of the world. So these additional tariffs are very strategic in the sense that they will hit farmers in the middle part of the United States. We're still waiting for the timing and the implementation of all of this, but this sends a very big statement. Also important in all of this is the timing of all of this. This is a very sacred holiday weekend right now. This is a time where families take time to remember those who have passed away. For the government to do this late on a Friday afternoon, early Friday evening here in Beijing really talks about the weight of all of this.
You all have a lot of questions for us about tariffs. We've got answers. Let's start with the basics. First off, what is a tariff? Simply put, tariffs are taxes on goods from other countries. They've been around for centuries. They're often used to protect domestic industries, workers, and they're also used to generate revenue.
Ruth from the Midwest asks this: who pays the tariffs imposed by the White House, the government or the foreign country? Even though the tariffs are on foreign countries, it is U.S. businesses that import products from those countries that end up paying the tariff. It could be the fact that some suppliers in those foreign countries eat the total cost of the tariff, but economists agree that's unlikely. The suppliers will likely pass the tariff down to U.S. businesses, who will ultimately pass that cost down to you.
So the question is, how have foreign leaders reacted, particularly U.S. allies, in the wake of Trump's tariffs? And this is actually fascinating because the reaction has not been broad-based retaliation. There's been a lot of threats over the course of the last couple of weeks, but in terms of tangible action and response, there's been a reticence to take that step, with the exception so far of Canada. More is certainly coming, but this is a moment right now where everybody's stunned, and just trying to figure out how to respond is probably the biggest question that leaders have in this moment.
Isaac from Oregon asks, how much will cars go up? Hey, Isaac. So right now there's a tariff in place on foreign cars imported into the U.S. And according to Anderson Economic Group, they estimate that foreign brands like Lexus and BMW, prices of those cars will rise by about $8,000 to $20,000. And then cars that are assembled here in the U.S. but use foreign parts could rise anywhere from $2,500 to $15,000.
Jeremy from South Carolina wants to know, what should the average U.S. consumer expect to be affected by these tariffs? Well, the first impact is you're going to see some significant changes to your 401ks and your investment portfolios because these tariffs have caused major volatility on Wall Street. You also may see higher prices on imports because companies, they typically pass along at least some of the cost of these tariffs to you and I as consumers. Here's the bottom line. The Tax Foundation estimates that the cost of these tariffs will be $2,100 per year to the typical family.
So John from Florida asked, what does Trump hope to gain by imposing tariffs? And the question's a little bit complicated, but here's what I'd say up front. Trump has made clear he wants fair trade. He believes trade deficits with most of these countries are dramatically too large, despite kind of how trade economics works. The other thing, too, revenue. He wants money for the United States, thinks he can finance his legislative agenda, and then there's negotiating power. How those all actually net out in the end, still an open question, but those are the goals.